Hello guys, welcome back to another video. In this video, we are going to talk about the important adjustments in dissolution of partnership. There are some very important adjustments which we have to keep in mind when we are doing the sum so that we can do it flawlessly. I've seen there are some adjustments which students tend to forget, so let's pick them up one by one. The very first one, when an asset or a liability is taken to the realization account, any corresponding or related fund or reserve is also transferred to relation account and not to the partner's capital account. For example, we are transferring investments, then the investment fluctuation reserve is also transferred on the credit side. Investments, we transfer them to the debit side from the balance sheet. So the related fund, IFR, will also come here. Similarly, we do it for debtors. When we're transferring debtors, we transfer the provision as well here. All right. Let's have a look at the next one. When the accounts are prepared on fixed capital basis, partners' current account balances are to be transferred to capital account. Okay, so when you have partners' current account and partners' capital account balances both are given, so that needs to be transferred. The current account balances needs to be transferred to the partner's capital account, and all your other adjustments you will be doing in the partner's capital account itself. So current account will be closed. No adjustments are required to be passed through current account. So if the current account have a debit balance or credit balance, accordingly you transfer them here. That's why I've shown here with both the sides. Any one of them, the relevant one will appear here, not both for each partner. Okay. Next we have bank overdraft. It is to be taken to the bank or the cash account that you're preparing and not to be transferred to realization account. Sometimes students are confused where do they show bank overdraft. So in the bank account, you will show bank overdraft as your balance BD opening balance figure. Okay. And if you have favorable balance, you show on the debit side to balance BD. If you have bank loan, then you transfer it to realization account on the credit side, like any other external liability by bank loan. Okay. Next we have, if the question is silent about payment of liability, then it has to be paid out in full. And this is a portion where most of the students tend to forget. Suppose you have creditors 10,000 and you have employees provident fund 5,000. And if the question hasn't mentioned anything, these two items you have picked up from the balance sheet, liability side. You have transferred them to relation account. But now the question is silent, has not mentioned anything about them, then you have to pick them up and pay them off in full at their book value to bank account, creditors, and employees provident fund. Entire amount to be paid off. This is where most of the students miss out and they end up making a mistake and losing out marks. You have to keep this in mind. If the question has mentioned any realized value, then you straight away put that. Otherwise, this is the adjustment you have to keep in mind. Next one we have about tangible assets. If the question is silent about the realized value of tangible assets and investments, it should be considered as realized at book value itself. So if you have machinery, if you have investments, again the question hasn't mentioned the realized value, then you have to take them at book value by bank, machinery, and investments. All right. Now the next one is a little interesting. You have to keep in mind when the question is silent about the realized value of intangible assets or accrued income or prepaid expenses, then it should be considered as nil, zero value. That means you transfer them to relation account on the debit side, but the realized value is zero. You don't get anything out of it if nothing is mentioned in the question. If the question has given a realized value, then you take that value. All right. Loan taken from a partner. It will be passed through the cash or the bank account even if partner's capital account has a debit balance. So if the firm has taken a loan from a partner, firm will pay that back in terms of a proper cash payment or a bank payment. That's why it comes here, bank account, by loan from partner. Okay, that is paid off and settled. That is not transferred to partner's capital account. However, if there is a loan given to a partner, that will be debited to the partner's capital account, right? So here, loan to partner, that is debited here. Can be any of the partner or both the partners. All right. Hope this was helpful. If you have any questions, do let me know in the comments box below. We'll catch you all in the next video with some next set of adjustments from some other chapters. Do share with your friends, do hit the subscribe button and the like button, and also stay tuned for more videos on this channel. Do follow the channel for specimen question paper solutions from ISC 2023, 2024, and also the board paper solution. Thanks for watching.